Hi, this is the Tokenomics. I'm a former stockbroker from the City of London, and I'm here to talk to you about the fundamentals or the cryptomentals of the projects you love and warn you about the ones that you probably shouldn't. Simply put, is that coin really worth it? So let's talk cryptomentals and find out what we're going to be looking at this episode.
This is the Tokenomist.
So I wanted to talk to you today about Sushiswap. Sushiswap is a DEX platform. It's part of the Defi ecosystem. It's on Ethereum's blockchain model. And what I wanted to look at was kind of after the fact, because I'd actually put it into a portfolio, was I wanted to see whether or not it had the right kind of fundamentals if you were looking at like a value model. If you were looking to invest in a stock and you go, right, you know what, I want to find things that are fundamentally undervalued or have value within it, have an earnings, have a cash flow, and even if the market takes a downturn, I don't have a problem holding it because I think it can go somewhere further in the long term, at least with just the yield. And so there is this kind of perception that you can't do that with crypto projects. You can, you just have to basically pick the ones that do have a revenue flow. You look at some of the networks where they've got very, very small revenue flow and you're thinking, well, why are you tokenized it? Where is the token factor from? Where is the investability? So what I wanted to show you was one way how I'm going to do on the screen as well, but I wanted to show you how I look at certain projects to try and find out if it's investable. You know, it's all very well you see these. I was watching a video just now on YouTube, I'm not going to name them. They talk about token-based economics as well, and one of the things they were talking about was, they said Chia network, it's got great fundamentals, and it's like, well, it's not really got great fundamentals at all, because the fundamentals are held back by the fact that you have to just smash through hard drives just to actually mine it. Whereas, you know, you've got things like Bitcoin, which uses wasted energy, and more so, and you've got other things that, like Cardano, they've got proof of stake. So fundamentals are important, but there is also another fundamental factor that I think that many people are missing when it comes to putting money into cryptocurrencies. And I get it, people want to speculate and they want to punt in the short term, but actually looking at the actual investability. So when I say investability, I mean, you know, is that token, why is that token being made? You know, is there a sense, if you're going to go and do a good example, and I'm probably going to piss off people who've got XRP, and I say this from a position of ignorance because I haven't done a great deal of research into it, but I look at all the things that they talk about with XRP and Ripple as a company, and they say, you know, it's like they had a partnership with MoneyGram, I think it was. Well, I don't buy loads of vouchers for Western Union, you know, in advance of me using Western Union in a year or 2 years time or 3 years time, because the price of Western Union will change. Obviously what I'm sending is generally $1 amount, but I guess maybe that's an ignorant analogy, but I don't get the reason why you would hold something. And now obviously if the reason to hold it is because a ton of people are going to buy it and it's going to go up in value just on sheer demand, you know, speculation, is a finite supply and all that, yeah, fine, but why are they buying it? Oh, because Ripple's going to beat the SEC case. And then what? Well, then people will start using their product. Okay, they will start using Ripple's products, but do they have to hold the XRP token? Why would all the banks suddenly, oh, I have my stash of XRP here? I don't get. Yeah, and I remember hearing before that you didn't have to use the XRP to use the software. So what's the point of it? And then, for example, you've got and then maybe I'll use this example more. Again, so I do say this was a bit of ignorance. So you know, and I'm sure people out there love this kind of stuff, and I'll get some comments at some stage in a negative way. But I'm saying it with the best intentions. But and I will be looking at XRP at some stage. I come from a stockbroking background, so when I look at things like shares, why do we buy shares? We buy shares because we think they're an investment, they think they can go up in value. But they go up in value, why? Well, they go up in value because the company gets bigger, and therefore the overall perception of that value of that company becomes more. You've only got X number of shares in existence, market cap divided by shares, you get your share price. What other reasons would you buy shares in a company? Well, you buy it because you want a percentage of that cash flow. You know, if you bought into a mate's, you know, pancake stand. I use that as an example because my mate's got a pancake stand. If you bought into a mate's pancake stand because you knew it was a cash cow, you're buying into it because you want a share of that profit. My cat's about to jump on the camera, and as that profit grows, you buying in earlier means the overall pot's worth more. Someone would want to buy it off you for more. So they're all kind of all interrelated. And so a lot of the crypto companies, crypto projects, I tell friends of mine, I say, like, don't look at these as coins or as currency. Oh, it's not a currency, but it's the currency is a wrong phrase. Think of them as direct to free businesses. You're essentially investing in a business and you're buying a crypto token, which is a share of that business. Now, that's the ideal scenario, and I think that's where a lot of the DeFi projects are quite interesting in that respect. But when you have companies that also want to go public, so you've got Ripple who want to do an IPO, they want to raise money, and when you buy shares in Ripple, what are you getting? You're going to get a share of the profits, or a share of the dividends, or at some stage the right to have got those dividends and you would have got in earlier. So what do the token holders get? What is the economics of the token holders? Is it just a store of value? Is that the case? It's a store of value. It's going to hold its value. You put your money in it. Okay, fine. So then we need to have, the point with Bitcoin, for example. Bitcoin isn't at the stage of being a store of value yet. People are buying in it now on the speculation that it will become a store of value when it reaches, balloons to $9-10 trillion market cap. Then it becomes more stable. Then the price swing becomes less, and the reward you get now for investing in it in the meantime is an asymmetrical return. That means £1 could become £10. You could lose £1, but the risk of losing that £1 is tempered by the fact that the reward is so it's hockey stick, it's exponential, it's 10x, it's whatever it is. But taking those ideas, I thought, well, there's a lot of projects I bought. So I happen to have some 1inch in my portfolio, and I bought it. So let me just full disclosure here. So I use a lot of funds when it comes to stocks and shares. I very rarely buy individual stocks unless it's a particular standout name or has a really good dividend yield. And how a lot of these index funds work is they will they'll weight the positions. I don't know if you just suck eggs if you know this already, but say you've got £100 or $100 market cap. So let's say the market cap of a market is $100. Maybe the top company is worth 50% of that. So if you were going to replicate that, you match the exact amount of dollars for each company based on how much percentage they represent in that basket. So I get the same with DEXs and swaps and DeFi. So I bought bits of Sushiswap and 1inch, bought more of Chainlink and Aave and things. I did that. But I ended up with these things, and obviously the market's been flipping around. And I thought, I'm going to take a look and see actually what's worth having, what's not worth having. And so I thought I'd take a little look at the P's of things like Sushiswap. 1inch, for example, doesn't actually charge fees. So I'm thinking, well, actually, where is the investability for a token holder? Now, you can vote on governance issues, and maybe you could vote on charging a fee, perhaps. That could be the future. But right now, the investability aspect is not there because there's no revenue. So I've got this token. Now I'm just hoping that the price gets pumped back up, and I might just get rid of that and put it into something that I know is investable. So that's what I'm trying to get at here, was what is the investability? So for me, the ultimate cryptomental or fundamental of a token is actually the investability setup of the token. Does the organization have the potential to generate enough revenue that is shared back to token holders through a coin burn or however it's done, that you could earn money from it? So I'm going to show you how I've done this with Sushiswap, and actually what's quite interesting. You make your own decision on whether or not that's for you. Some people aren't excited by these kind of numbers sometimes, but it just gives you some ideas of what you can look at as well. So I'm going to jump onto, so this is just, you can see here right now. So we've got here fully diluted market cap today. Let me just refresh the page actually. So what is it today? So it's 1191, it's gone up 11% a day. Market cap 2.9 million, nearly 3 billion. And what I'm using, I've been looking at some data from token terminals, which is a pretty cool. I've literally just started looking at this last day or so. It's pretty cool, and you can see here it keeps an indication of annualized revenues, market cap. So Sushiswap, how it works, it charges 0.3% of all transactions going through its network. Now Sushiswap is a bit of a cheeky one because they joke that it took Uniswap 2 years, took them 7 days. They essentially imitated Uniswap's platform, but they added one feature different. They added in the fee distribution back to token holders. Now Uniswap can change that with their governance, but Sushiswap made sure it was the key tokenomics feature of their coins, which means, if you look over here, this annualized revenue, a percentage of this revenue is paid back to token holders. It actually works out as 1/6 of this, so about 16.67%. So I've created a little spreadsheet, and I'm going to come to that in a second, but I just wanted to give you some indication of how that affects prices and those kind of things. One other quick assumption I'm making here as well, right? I think I'll say this straight from the outset. I'm assuming you're not subscribed, so subscribe, please. No, the actual assumption is this, that I think is quite interesting for the whole DeFi market. It's Memorial Weekend. It's May the 30th. Let's just check. It's May the 31st on a Monday, Memorial Weekend, or Memorial Monday, whatever it is, right? It's May the 31st. There is $60 billion locked up in total value locked up in DeFi, decentralized finance, worldwide. The global market cap of the crypto market is 1.6 trillion. So I can't remember who made the phrase recently. Someone said, with DeFi, add a zero, this thing going to the moon. Right? That's the most moon boy thing I'm ever going to say. It was a quote, I think it might have been Jim Bianco, it was on like Decrypt or something. But it's a pretty good podcast, actually, Decrypt. But I think it's going further. But I'm going to just go with add a zero, and I'm going to justify this now. I'm going to forget about. I'm going to say I think the DeFi network is going to go up by 10x over the next few years. I'm going to justify it by a very, very simple statistic. There is 60 billion locked up in DeFi. There's 1.6 trillion market cap in cryptocurrencies. If you had a message on your phone for your online bank says, "Hey John, hey Kelly, do you want to just move your money from this part of your account to this part of your account and get a 4% return an annum? At the moment you're getting nothing. Do you want 4%, 5%, 7%, 10%? Yeah, thanks, yeah, just button, pressed, bang. It's a no-brainer. So if you're going to hold money in tokens for the long term, it's going to start to dawn on you that you're missing a real opportunity to get additional free tokens. So there is a very, very easily addressable market right now in the DeFi space that is not using DeFi, and they have crypto tokens, and they don't have to add any more money. So I'm doing an assumption in this based on very conservative basis, I think, and I think it's fair to say it's pretty conservative to think that a third of money tied up in cryptocurrency could go into decentralized finance. I think that's pretty reasonable. Now, some people might only have £10, right, or $10, and they're like, "Oh, what's the point of me using it?" And I'm sure there's lots of people like that. But as we always hear all the time, the top 1% owns 90% of the money in everything, in anything that ever happens. And those people are the ones that are going to move the needle. They're going to go, "Hey, we've learned about Bitcoin now. We know a bit about Ethereum. What's this DeFi stuff then?" And it's going to be those savvy investors at the institutional level who are going to flood that money straight in. So it's big. Right, so let's have a look at this. So Sushiswap, okay? Annualized revenue. A few things here. Where I get some of my data from, I use things like DeFi Pulse, it's pretty good. Total value locked in, so I was just there 657 billion as of yesterday. What am I showing you this for? There was probably some reason, probably some Pornhub's going to come up in a minute. Right, okay, this is one other thing as well. So I want you to also bear in mind as well, with this assumption that I've made, is so there's 60 billion locked up in DeFi at the moment, and there's a bank in the UK, if you're not from the UK, Lloyds Banking Group. Total assets under management is £870 billion. So it's about $1 trillion. So we have a banking group in the UK that has $1 trillion assets under management, or being worked on. It's such a small 6% of one company's assets under management is what the entire DeFi market. This place is going big. And with the phrase "a rising tide lifts all boats," that's what I want you to follow me on this journey. Let me just see why I've opened some of these things up to try and get some idea of why I'm doing this. This is the Sushiswap website, actually. You can see with their white paper and everything else. They've got their governance. People make proposals. And if you take part in the governance, you can get access to the sort of the 16% of their fees. Right, that's the bombshell, the bomb stuff dropped. Now let's jump on to some of the fundamental things I want to look at. So when I look at fundamentals of any kind of thing to invest in, I am looking whether or not the coin is inflation or deflationary. Everyone wants a deflationary coin, but actually sometimes a bit of inflation is good. Why? Because how on earth do you secure the network? If you're not securing the network, then if you haven't got anywhere of securing the network, it becomes hard. With Sushiswap, they have an element of inflation baked in temporarily, but it caps off at a total number of issues, total number of tokens, and I've actually I've gone for the full number of tokens ever issued, rather than just pretending a partial amount. I've gone for the full amount for some of these assumptions here. One of the other benefits of having a fee-free system. So one of the competitors could be fee-free systems. There'll be points where people come along and they build AMMs and they'll go, "We're not going to charge any fees. It's our gift to humanity." The problem is, without fees, they haven't got the ability to improve those businesses. If you as a business don't have access to capital to grow your business, then you're at a unique disadvantage to one that does. So there are going to be people who try and do lower price options, but I think there's always going to be a level where you kind of have that, you need that funds to grow things, and with that funds you can still innovate, reserve against the token, valued in. I've no idea where I've written that now. This is actually the third time I've done this video because it kept going out, and I've got a really bad hangover today as well. Having money as well is very good because it allows you to do more things like marketing and growing the brand, growing the reputation. Sushiswap's good branding. When it comes to things like their Twitter, they've probably got 1/5 or 1/6 of the followers of Uniswap, and they do have quite an opaque structure. You don't necessarily know who's behind the organisation, but I think part of that as well is the fear of things that happen to Ripple. So I will take that with a pinch of salt for now. At the end of the day, it's a governance-controlled coin, and it works quite well potentially on those basic token economics for a coin holder. But what I wanted to actually look at was the price. We all care about price predictions and things. I'm not looking so much at price predictions here. What I'm looking at is how I can work out what the underlying value of it is, right? So in traditional finance, so banks, mortgage lenders, we see price to earning ratios of between 14 and 31 at the moment. Sometimes they're higher. And P is price to earnings, so how much you pay compared to what the company earns per share, and how long it would take you essentially to pay back your investment. Fintech companies like Square, they're going to have P's of hundreds, 200s, because they're still growing and they haven't expanded into their space yet to have that. So you will see tech companies that in the financial space will have much bigger price to earnings. But I wanted to be conservative with my numbers, conservative with the speculation of where the DeFi market's going. I just wanted to be conservative because you don't want to hit. If you're watching this video, it's probably because you're sick and tired of Moonboy sort of stuff. So anyway, this is what I've got here. So this is year zero. Obviously, this is now out of date by 1 day, but let's just work with this. Okay, the price was $10.76 when I was doing this yesterday. Tokens in issue. This is how much revenues is generated in the last annualized as an idea. It's 800 million. Okay, 0.3 is the 0.3% fees. This is how much they pay out. So for every transaction that goes through, 0.05% goes to token holders who take part in the governance dividend, essentially, and which works out as about 16% of the fees. So annually at the moment they're paying out about 133 million to the token holders, and that doesn't include the liquidity pools. There's a whole other set of money that if you stake your Sushiswap and you take part in the liquidity pools, then you can earn more as well. So I wanted to go on the most conservative angles for everything, right? That equates to an earnings per token, EPT. Created that. That's my new thing that I've created. I'm going to trademark that. Earnings per token is 53 cents, which is a yield of 4.96% or a price to earnings ratio of 20. That's pretty conservative if you were a bank. If you were looking for a dividend and you got a yield of 4.96%, which is above the yield that Bitcoin holders get paid on BlockFi, it's way above what you get in the savings account. It's beyond what you get in a great deal of companies in the Dow Jones or the FTSE 100. I think the FTSE 100 average yield at the moment is about 2.96%. If you have a basket of all of them, I've got some stocks that have got higher than that, obviously, but that's not what you normally get from a first year, second year tech company. 4.96% yield, right? Now this obviously relies on revenues continue to be at the level they're at now. Okay, and that's an assumption. There's a thing called the Lindy effect, when it relates to non-perishable items, that however long something has existed for is how long it can continue to exist for, as a general sort of prediction. The non-perishable, like banana, lasts 10 days, isn't probably going to last for another 10 days. But Facebook lasts for 10 years, it's probably going to last for another 10 years. If Facebook had only been around for 1 year, you could probably only be confident it's going to be around for another year. Bitcoin's been around for 11, 12 years. We can be pretty confident it's going to be around for another decade. So that Chia technology, the Chia coin, the one that everyone's talking about as being eco-friendly, which I've already slammed earlier on at the beginning of this video, they've been around for a year. They're probably only going to be around, we can only predict they can be around for a year. I think that I'm amazed at this. I'm not really going to go down that route, actually. I'm amazed that no one's really called them out enough on the hard drive issues yet, but that's a whole nother video. So this is what we're looking at here. So right now, yield of 4.96%. So if the market tanks, for example, and it goes to absolute shit, and you're left with a coin that's worth, let's have a look here. Token issue, market cap, let's bring that down. I've only just started setting this up, so it may not work yet. Well, there you go, right? So you can see here the yield's changed, right? So if, for example, the price tanked by 90% for Sushiswap, what are you left with? You're left with a coin that's in theory at current revenues has a yield of 49%. Now that's assuming the business still operates as it does normal. I think the reality is if the price fell by 90%, you're probably going to see a hit to revenues, but you're going to also see a growth in the yield that you've got for those tokens. So I think that's going to then attract people into that token. And this is where I was going with the fundamentals. If someone then sees a very, very heavily undervalued coin or project, they can look at that and go, that's undervalued, I'm buying into that. And they'll buy that back in. So you'll end up with this kind of equalization. People chase yield, people chase return, people chase risk-adjusted return. You look at it now, that's why when bond prices spike, or the bond yield spike, then you see money go out of stocks into bonds, because for the return on what you're looking for, it's less risk, no risk almost. Well, there is obviously, but for the return. So what you tend to see is money migrate across when opportunities like this exist. So I'm just going to put that 0 back in here. Okay. Now, if these didn't have revenues, then you would obviously have no yield, and you'd be looking at it and going, well, what am I buying into? Okay, I'm buying into a project that needs to create revenues. It needs to bring a network effect. It needs to bring traction. Having token holders who are invested in the platform that can earn revenues from it and from staking it actually kind of ring fences it. It's like Cardano's done very well because it's got a lot of people staking it, and it means they are ambassadors and vanguards for a project. So I think this helps Sushiswap definitely by having good token investability economics. So that's what you're looking at with the yield now. Now I made an assumption at the beginning. I've done the rest of these go up by 20% each year. So I'm making conservative judgments that the industry grows by 20%, and in return everyone's revenues in different areas grow by 20%. And you can see the impact on the yield if the price stays the same over time because of that. Now, earnings per token goes up. What happens? The PE falls if the price doesn't change, and people again will go, hang on, that's a 10% return per annum just for holding the token. That doesn't include the liquidity pool, so the price comes up again because people chase that yield. It gets to a point where it becomes the risk and the reward is a bit too even, and then it sort of tapers off, and then you get that kind of perfect level. And that's what you look for generally with stocks. So if you sometimes see a really good stock and a market sold off, for example, and it's got a really good dividend return, nothing else has affected the price other than just exchange traded funds dumping positions because they have automatic sales and people are selling, you can see really good value opportunities, and that's why people like Warren Buffett have made a career out of that, of buying those undervalued, below market value stocks that have a very good yield. People chase the yield, the price goes up, and then people will then take their profits because it's a revenue bearing asset. Now, I made the point about the add zero, so let's just jump straight to the add zero column on the bottom, or row on the bottom. Okay, so we add a zero to the industry, and what we see is the revenues go from being 800 million to 8 billion for Sushiswap. Okay, that's not assuming that they don't just become better than Uniswap. I don't think they will. I think they will be sitting in second spot, but I think they'll do well, and I think they're the coin that's constantly mentioned whenever people talk about it. So if we see that extra bit of money go into the DeFi space because it's already sat there, it's just not being used properly. Then you suddenly see an annual payout go to token holders for 1.3 billion, which is an earnings per token of $5.33, which would be a yield of 49% and a price to earnings of 2. Let's be brutally honest. No one is going to sit there and leave a coin with that level of yield without the price going up. It's just going to change, and you're probably going to see a price move in accordance with that yield valuation. So what happens then? Well, if we move the PE back to 20, the same level it is now, in line with traditional finance, you're looking at a token price just on those bases of $106. Now that's not me saying something gets to $106. I'm just saying if the PE got to those figures, let's say if the price to earnings was 31. You'd have $165. There's no reason why adding a zero to the DeFi space, because the money's already in. I mean, that's the thing, the money's already in it. There's no reason why adding a zero is the end. It could be add a zero and add a zero. I mean, it could be as crazy as that. We could be talking an 8 trillion DeFi space, not a what is it now, 60 billion, 600 billion, a 6 trillion. It could be add 2 zeros, and you could go crazy. And then that figure, you add a zero to this as well. But I just wanted to give you some idea of what you can do, what you can look at. Where did I get this data from? So I've got this data from Token Terminal. As you can see, I'm not even a member. That's just to confuse you with all the screens. Token Terminal, they keep a lot of data on it. They've got a loader on there as well. So they've got things like revenue, annualized revenue, and you can do this for any of the projects out there. And you can give yourself some idea then of whether or not you want to buy something, what its PE is. And I think there's they do keep a list of all of the PEs here. So let's have a quick look. Price to sales ratios. So I think they've got a list of all of them here. Now this is sales, not revenues. Or this is sales. Hang on, actually, is this sales? Let me just check actually. While it's loading the data. Revenues. Price to sales. It is 800 million, 816, 2.4 billion market cap. Okay, no, it's about that. So price to revenues, but obviously it's not earnings. Earnings are a bit different, but automated market maker probably doesn't have a ton of costs. So here you can see some of the P, the price to sale ratios. These aren't, so this isn't, what I've got here is I've created a price to earnings, price to earnings per tokens ratio. And this over here, the one you're seeing on the other screen is revenues to market cap. So what you can do is you can use that as a way to monitor actually how the platform is changing. But look, Reflex, huge price to sales. You'd say that's probably potentially overpriced. Or the other thing is it could be a brand new project and it doesn't actually have any revenues just yet, but it could be about to absolutely go insane. So worth noticing. But this is why I picked up Sushiswap, because look at that. It's got the lowest, it's now down to 2.98. So they're really low. Keep a DAO. I always hear that talked a lot. I don't know, haven't done much on that one. Bancor, Uniswap's pretty good now, 8.52. But obviously you've got to imagine there's a risk element to this as well. Low. A lot of startup companies, tech stocks and things will have very high price to earnings, price to sales. Let's grab my drink. And that's because they're in the growth stage. But there's also an element of an industry like this where it's really new. You could have just drink some drink. World's biggest bottle. It's not the world's biggest. Second. There's also the risk of what if Sushiswap isn't here next year? So price to sales, price to earnings are great and everything, but you can go 4.9% yield, 5% yield, 6% yield. But if it's not here next year, then it was a terrible investment. So you've got to bear that in mind as well. There's an element of risk you've got to take on board. But what I just want you to do is, before you start buying these kind of coins, ask yourself, is it ornamental or is it actually investable? And I think there's so many of these aren't actually investable. And I think we're not asking ourselves the question enough if we should buy it. Now, if you just want to see price go up, then okay, that's just a gamble. I think if you look at these things and you ask yourself if the fundamentals make sense from an investability perspective, and they don't, and you don't get involved in it, your regret is going to be that the price went up because everyone else FOMO'd and bought it. But you can also sleep better knowing that you've got one less thing in your portfolio that's got the chance of exploding. I think is the bottom line really. So this isn't me price predicting. This isn't me saying you should do this. A lot of people out there talk about this is not financial advice. They massively give financial advice. Look, I used to be a stockbroker. I've done it when it comes to small cap stocks, looking at and the big stocks for dividend yields. I know what I generally look for when I invest, and I thought I'd like to be a voice of reason that just says, hey, here's another way to look at these things to help you even the odds up. I think that's all I can say really. It's like going to a casino and counting the cards. You're just evening the odds up. But anyway, that's that. If you found this kind of video useful and you want me to do more of this kind of stuff, more looking, sort of digging away and finding out what's there, do hit a message in the comments. Do hit subscribe, please, if you can, or a little like would be nice. And I'm going to leave you here. Thanks for watching. But that's my break.